Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavestrategy.com. And we can clearly see in today's session as well, the market has been very volatile. Over past few days, there was a sharp up move that was seen towards the level of 10,710, and then a very sharp reversal happened from after the gap up opening, and we saw a reversal on the downside and Nifty losing nearly 400 points from the highs, and that is how markets have been over past few weeks. So start of September has been extremely challenging. From there on, we have seen some huge movements that was not seen post 2008. So during such type of a scenarios, when the volatility is so high, you have to be very careful in taking the trading decisions. Also, if you are trading, say in terms of 10 lots, then you have to reduce it to 5 lots, because what is going to be your stop loss when you are trading in 10 lots, you have to double your stop loss this time. So normally, if you keep your stop on Nifty as 80 points, you have to keep a stop of around 150 to 160 points on Nifty. On Bank Nifty, if you normally keep stop loss of around 200 to 40 points, you have to extend that stop loss to around 450, 500 points. The reason being, so there was some technological glitch because of which we went off air. So if we are trying to look at the market movements, I was suggesting that the movement of past few days or few weeks have been so big that volatility has increased, and because of that you have to increase the stop loss on your given trades and reduce the number of lots that you are probably trading in futures and options. That is the only way in which you are able to survive in the current ongoing market. We can clearly see after Nifty touched 10,710, there was a huge sell-off which started. That level of around 10,750 was any which ways we were expecting in that zone, because that is the 38.2% retracement of the entire fall. The move from 10,170 towards 200 towards 10,700 was very much predictable, and we were mentioning in our report that we expect markets to head towards that level. So it worked out brilliantly well, and I would not be trying to catch the last 30-40 points of move just to ensure that when we are capturing 400 points of move, markets can be off by 30-40 points easily. Now, what we are seeing is a very sharp rally which happened at that time, and now a sharp fall again. So the downtrend might be resuming, but whenever we see a sharp rise followed by a sharp fall, Nifty normally tends to move in a range for a few days before again starting the trending move. So, and that is why there is a possibility that we might see few days of consolidation, maybe a day or 2 days of consolidation, and post that the downtrend is going to resume. Why I think it's going to resume on the downside eventually? Because the time cycle, which I very closely follow, is still in the sell mode. The time cycle continues to be in the sell mode for next 15 trading sessions. So for next 15 trading sessions, any pullback is going to be short-lived. It's not going to be an easy scenario for someone who wants to be on the bull side, because what is happening here is any rallies are going to be sold into. There are people who are stuck at all the levels on the Nifty, and they have been waiting for pullback so that they can start squaring off their positions and start coming out of the positions. So anyone who have created long positions near 11,000, 10,800, 10,600 has now been given up all the hopes on Nifty and will start squaring off position as and when the prices are looking little lucrative. And that is the reason why we are going to see the sell-off as a sharp and fast, whereas the up move is going to be an overlapping and slower. So the overall tone for the markets are going to be changed. We are now from buy on dips market to sell on rallies market. In this kind of a scenario, if you want to play for the retracement which is on the upside, you can do that, but you need to be very careful and very cautious. Let us now try and look at the overall index and try to see on the charts what it is doing. Before we proceed, I would also like to share across my screen. This is uh, about the overall. This is the homepage of wavestrategy.com. You can see I'm conducting a training on Elliott wave, time cycles, and Neo wave in Ahmedabad for the first time, and this is scheduled on 24th and 25th of November, where I'm going to discuss various techniques. How do I apply these various techniques together on a chart over the period of 2 days? So I keep getting a lot of questions. Is it sufficient to cover neo wave in 2 days of time along with time cycles? See, it is requiring a lot of practice. If you want to keep learning about neo wave, it requires a lot of practice. So, but I'll ensure in these 2 days you take out certain very objective tools. If you start using it, the accuracy is going to take a huge leap. And and post that, there is going to be a constant interaction for the period of 1 month, where you will be discussing all your queries, doubts, and I'll be more than happy to address them. So this is the training. The topics, various topics covered are mentioned here. You can go through that, and then you can visit the website and select the banner where it's mentioned about the training and the fees and everything, where we are conducting it and how long. So it's in Ahmedabad, and you can enroll for the new wave time cycles. And I'm also going to discuss personally about various indicators that I use. I'm going to talk about the trades I have taken and what went right, what did not went right, and a lot of those discussions will revolve around that. And last time I was at an event, and I talked about how the markets are now looking very much at topish, and about this was about 1.5 months back, and exactly few days later the market stopped out. So what techniques I use to predict such kind of tops will be discussed in those 2 days of time in Ahmedabad. Now coming back to Nifty, okay, this is the chart of Nifty. If you look at it, we have formed a sharp rise, and after that we are now seeing a sharp fall, as I was talking. And the Nifty has formed a doji candle in today's session. It closed where it opened, and there is nothing much but up and down move. However, this up and down move itself has been sufficient enough of more than 100 points on an intraday basis. So you understand the volatility that we are seeing on the overall basis. If I apply time cycles that I normally use, and if you look at these time cycles, you will get a lot of understanding on what I mean, why the markets are still in the sell zone and not the buy zone. So if you look at these cycles, uh, let me share across the screen over here. Okay, I'm missed the sharing the screen. So let me share across the screen, and you will be able to see the cycles. Okay, so this is the chart. Over here, I have drawn a cycle which is connecting the lows. So if you look at this cycle, you can see a low being formed here, another low being formed here. Let me remove the Fibonacci level for easier visuality. So you can see a low being formed here. This was a huge spike on the downside. This was, I think, the budget. Then again a low being formed here, another low being formed here, a low being formed here, and the cycle topped out pretty much in the first half of the zone itself. That was a very clear indication that a top has been formed, because a cycle of 55 days topped out in the first few days itself, and that is a clear indication that a bigger cycle of 108 days has topped out. And that is why I predicted at this point of time that we are headed for a much bigger fall, which is going to be similar to that of 2018 February, and we saw a huge crash on the downside. So, and price were also at the channel resistance, and now we are here in this zone where we are trying to figure out where markets are headed. It's going up, it's going down. But if you look at this overall cycle, we are still far away from where the lows are going to be formed, and that's why it's not going to be an easy way on the upside. We are going to see some up move and then again the down move, unless and until these time cycles are behind us. So once the time cycle low is behind us, we know that a meaningful pullback or retracement will start on the upside. But unless that happens, we are going to see this down move, we are going to see an up move, probably again the down move, and that is how we are going to behave. So this is from the time perspective. From the price perspective, I use neo wave to understand the overall trend. The overall trend has been negative. The entire down move over here had been in the form of wave A. What we are now seeing is in the form of wave B, and this wave B is probably internally again forming a flat correction kind of a pattern. So we had a sharp wave A on the upside. We are now in wave B, which is going to consume maybe 2 more days of time. Then we are going to see wave C on the upside. Post that, the B will be complete, and the C leg on the downside, bigger downside, is going to start. So during such scenario, you need to understand the pattern under formation, because until you know the which pattern is being formed, you are not going to trade very well. Because after you see this up move, you might have went long near the zone of 10,500, 600 on the breakout, but that is just to see it again going against you in a very short span of time. Now seeing that markets have fallen and going below 10,270, 80 levels, you might have been shorting there just to see it closing back about 10,300. So that is the way in which the current market has been behaving, and you have to be very cautious and careful in the way you trade. So if I have to sum up on what we are seeing right now, we are seeing a volatile movement on the index. Forget about the stocks; they are doing their own independent things. In today's session, when the index was down, many of the stocks were probably trying to move up, like DLF and EDG group stocks. So those stocks are doing their own independent things, and that's why knowing the independent wave pattern of these stocks along with Nifty is very, very important. And this independent wave patterns of stocks along with Nifty is published in our daily research report, Financial Waves Short-Term Update. You can refer that for the overall view of Nifty along with stocks. And for Nifty, I think next week is going to be more range bound with a negative bias, because what we are seeing now is a very sharp fall. We might see a pullback, but that's going to be a temporary pullback, and then again the downtrend is going to resume. So for trading strategy, you need to have key levels in place. You need to know what is the resistance level, and you need to know what is the support zone, and based on that resistance and support zone you can derive your trades. So next week, trade carefully, reduce the positions that you are taking. Do not get disheartened by looking at Nifty movement. That is the norm. It's going to be that way for next few months. I think it's not going to stop so soon. A very important top is formed, which is not going to be taken out around 11,700. I don't think we are going to take out in next 1 year at least. Whatever comes, whoever whatever says, we are still in an expensive territory. P ratio is still quoting around 25. It is not has come down to the median level of around 18, 19, 17 levels. So there is still a lot of room for markets to move down eventually. It's not going to be a direct down wave. It's going to be an up move. It's going to be a down move post that. So you can play this upswing or the downswing depend on the type of trader you are. In case, as I said, want to learn about this wave theory, we will be discussing a lot on this in the upcoming event in Ahmedabad on 24th and 25th of November. For any queries and registering for the event, you can visit the website wavestrategy.com, or you can also contact us on 99204 22202. That's it from my side. Have a wonderful weekend and see you again same time next week on a Friday. Thank you.